Devang Mehta, good afternoon. Thank you for joining us. Please help me decode what Zomato is trying to do.
Good afternoon, Nikunj. Difficult first question, which is out of syllabus, of course. But jokes apart, I think very clearly it's a misery that a lot of these companies are right now facing. Probably two things. Yes, one, listing on a sort of a wrong valuation. The times were so good, everyone was just making merry, and all these companies sort of got listed at phenomenal valuations. People were just scrambling in for getting allocations in this so-called new age businesses. Yes, of course, we all know that still we are not adept to that culture where sort of you value a company on price to sales rather than price to profit. So that's one thing which we need to still digest. But another part is that, as you rightly said, most of these companies know how to do business. They probably know how to burn cash and sort of gather market share. But how to sort of manage relationships or how to sort of get into investor relations and answer the community, the investing community, which is very important if you sort of want to not only create a great business, but also want to have what I can say is iota of doubt, clear iota of doubt in the minds of investors. I think that part in most of the companies is still missing, and they are not able to answer difficult questions. So my sense is right now the times are such tough that great new age businesses are already trading 25-30% down. The IT businesses which sort of command great valuations, even banks which are right now available at 2 times price to book, 1.8, 2.5 price to book. How can this new age companies where the era right now is where NASDAQ companies are sort of getting crashed, how would they command this sort of a valuation premium? So I think there are multiple answers to this, and I think I'm able to give a justified answer. There are too many thoughts in my mind, but this is all leading to extended fall in these companies. Whether the fall will stop somewhere, the answer is yes, there has to be gravity somewhere. But whether you have conviction to buy this type of business, the answer is a clear no at this point.
That's Zomato for 60.5 rupees. Reliance, Nuresh, is having an okay day. Now, what does that mean for Reliance? It's having an okay day?
So it's having a good day given that the markets are flat, the stock is up 1% or more.
1% is not good.
In terms of what is happening in the market.
So now benchmark is come down to 1%. 1% Reliance is up. Kunal and Nuresh get a smile on their face. Reliance is up.
No, Nuresh gets time to shave.
Okay.
So Reliance
is having a good day.
It's just I think it could get better from here on. It has taken support from the right places. So that's the reason the smile is. It's taken a support from the 2400, 2450 mark. And now we watch for whether it can cross 2600 going forward.
Kunal, Reliance, 1% up. Good day, flat day.
I think it's an okay day for Reliance Industries. It's participating. Finally, the good part about the stock today is that it's finally come in line with the market mood, because this was one of the few stocks where the market's heavily dependent upon just about a few weeks back. Now somehow in this last 5 days, 6 days of market recovery, Reliance has not participated. So if that's the case where Reliance gets back into the line with the market mood as such, then it adds to more positive sentiment and confidence. The other way to look at it is Reliance has today managed to break back above the 200-day moving average. Now it's done this break over the last 4-5 days, 3-4 times, but then it's not been able to sustain. The next day generally is a day where the stock reverses. So if we happen to see, say over the next 1 or 2 days, the stock building on from today's gain, then it could probably lead to a decent up move on the indices as well.
Okay, so that's as far as Reliance Industries go. We'll ask the chartists as well, but there'll be limited chart history. But Nikunj, I wanted to ask you about this one actually, which was Star Health. There was so much which was going to be said, Nikunj, about Star Health during the IPO time. Look at the way it is. I think it's 27% down in the last couple of trading sessions.
See, my understanding of the business is that it's a good business. They're market leader in the retail category. They do have a business in which they're genuinely making money. There are two types of floats which insurance companies have. One is that you get the money and you invest in treasury, and then you get float out of that. I think on an independent non-float basis also they are profitable. They had taken a COVID hit, which everybody took because the cost had changed, and insurance is one business when you go through a unfortunate event like COVID, so the number of claimants is going to be significantly higher, and that is what has happened to all the insurance companies. So I think there is some institutional seller there. That is what it appears, because I have not picked up anything which corresponds with the
negative.
news and the price action. In insurance is one sector. In markets, you always say that you should always do front view driving. But in insurance is the only sector where I think you have to do rear view driving. You have to look back and say, okay, what went wrong? COVID. Otherwise, in markets, you don't get money by buying yesterday's news. You always have to preempt future. But insurance is perhaps the only sector where you actually have to do rear view driving. And that is where I think the worst in my book is behind us. I was looking at notes of Deepak Bhai also, Mr. Parekh of HDFC Life at the AGM. He didn't sound worried to me. If at all, he was quite excited about how things are shaping up now. So it's one sector where, frankly, if you ask me, I'm personally surprised why there is no strength. Devang Mehta, do you agree with me on Star or on insurance?
You hit the nail on the head, and in fact, I was about to mention that insurance as a sector, sort of, we have started to like it a little more that we liked pre-COVID. This has been one of our mainstays in our portfolio, and no marks for guessing that it has sort of underperformed the broader market. So let me confess that first. And you are absolutely right saying that COVID was one of the biggest dampener in terms of not only dampening the sentiment, but top lines of all of these companies, let it be HDFC Life or SBI Life. I'm talking about life insurance here, or be it ICICI Lombard or Star for that matter. Most of these companies' top lines have been growing. The bottom lines have not been shrinking, but in the sense that the companies are still profitable after solving so many claims, or after responding to so many claims. HDFC Life itself responded to around 4,400 crores of claims. So the sense one gets here is that all these companies are now slated for a supernormal type of profit, if we are calling this an endemic. And of course, let's pray and hope and pray that we are probably past the worst of the pandemic. So if this is going to happen, I think the next 3-4 years will surely belong to this industry, with all the price to embedded book values all probably collapsing in this sort of mayhem. My sense is these are sort of now value bets in a way. As banking has also got interesting, insurance has got more and more interest. And in the Western world, a lot of these insurance companies of the same entity command more market cap than the banks. So of course, we are far away from that. Today, HDFC Bank would be roughly a 7 lakh, and HDFC Life would be probably around, say, 1.1 lakh crore or 1.25 lakh crore. So that gap has to sort of narrow for sure. So I think we are bullish on the insurance, be it life insurance or even general insurance.
Devang, everybody was bullish on LIC when it went public. I also thought that it's a cheap stock, and I must admit on public television that I never expected LIC to go down to levels of sub 700, but it has gone down to level of 700, sub 700s. 3 brokerages who are regarded as the powerful foreign brokerages who got weight behind their word, they've come up with a buy report on LIC, and the stock has not moved by even 5%. Somebody is really angry there who's selling LIC, right? And I wonder why.
I think, Nikun, that's the sentiment part of it. As you rightly said, this is one company which was available at a valuation which was sort of not only mouth-watering, but also it was sort of a brand which India identifies with. Secondly, insurance as an industry also, as we know, was going through certain overhang, which it has come out of. Thirdly, the most important factor for LIC is, I think the retail community as well as the HNI community know that the government is not going to sort of wait for a very long time, and the overhang of divestment which happens with a lot of PSUs is still not passing. And so this was a very small dilution that the government took, but probably in another year, 2 years or 3 years time, further dilution would also come into play, which has always happened with the ONGCs and the Coal Indias of the world. So I'm not comparing the businesses. And secondly, how LIC adapts itself in terms of disclosures with the private sector peers. And when foreigners come to India, they generally want to buy the best private sector banks or the best private sector IT companies, of course, and the best private sector insurance companies. So how it falls in line with the foreign investor community is also one thing which probably needs to be monitored. So of course, not at all bearish on LIC, but yes, it needs to now compete with the private sector peers in a positive way. But yes, I agree with you on a valuation perspective. Looks very, very cheap.
That's the word coming in, Devang. But let's go across to our technical experts now for the BTST ideas. Buy today, sell tomorrow. What could be those short-term ideas that can help you make money? First up, let's go across to Nuresh. Nuresh, tell us which are the stocks you're picking up. I won't be surprised if it's ITC again.
So it's ITC again trying to make that move above 270 and 272. The lowest risk, highest reward possibility here. A stop loss at 269 and a target price of 280. Second is a buy on Nalco, which has started reversing from the lows. A good reversal candle across the board in the middle pack. Nalco could be looking towards a move towards 76 plus. Stop loss to be placed at 71.
And same question to you, Kunal. Which are the stocks you are recommending for a buy today, sell tomorrow, expecting a quick buck as far as those counters are concerned?
So it's a non-F&O stock. It's a Bang Garden Reach, ships. I think that stock is trading at 234-35 levels. It's completed a classical inverted head and shoulder pattern on the hourly charts, and the stock has confirmed a breakout on the back of some very high volumes today. So this could be a sign of a strong turnaround for the stock, suggesting a buy with 248 as a target, stop loss at 228.
Gentlemen, Naresh and Kunal, so you've given us your ideas for buy today, sell tomorrow. What I'd like to also ask you is that tomorrow morning when you're going to be with us from 8 a.m. to 9 a.m., you're not going to give us these ideas, right? There'll be new ideas. Just want to clarify that for me and my viewers. You're doing homework today, right?
Let's see.
Naresh, I'm not liking this silence.
I might repeat the same idea.
You repeat it today morning, today afternoon, and tomorrow morning.
So I think ITC is his consensus bullish call. Reliance is Kunal's permanent bullish call. If they don't find any other counters, these are permanent.
NTPC,
And
Power
of
Grid,
course.
NTPC and Power Grid also I'd like to add.
But you know what? I have a
Apple
question
Access
on
as
this M&M. If this comes as such a high conviction buy, I mean, why aren't we seeing a bigger move?
No, but those moves, they take a lot of time. In fact, I think it's very good that the stock is not flying in a very spiky
Tata
kind of a
Elxsi
manner.
way?
Tata Elxsi way, or the
No, because
Petronet
I'm just
kind
wondering
of way.
why haven't the mutual funds lapped up on it if it's a clear buy both on a fundamental basis and a technical basis?
So we'll get to know, of course, at the end of the quarter. But then I'm pretty certain that there are stronger hands which are buying the stock. So buying the stock from 750 to 1000 plus for a stock like M&M, requires a lot of fresh inflows from various market participants. And I think that's what I was trying to indicate some time back as well, that the way in which the stock is moving, taking out every psychological mark, trying to take a rest. Earlier the stock took resistance at 1000 mark, spent almost a month over there, and then now moved up to 1100. So when you have such kind of a move where stock takes out resistances on a step-by-step manner, we call it as a classical sign of a strong up move.